Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Victory rally, Japanese stocks surge and the yen edges higher after Prime Minister Sanae Takaichi wins a supermajority and a powerful mandate for her spending plans. Starmer, meanwhile, is under strain as the UK Prime Minister's closest aide quits amid controversy around former US Ambassador Peter Mandelson. We'll get the view from the Reform UK Deputy Leader, Richard Tice. Plus, easing tensions. Oil declines after Iran describes its nuclear talks with the US as a step forward. Well, happy Monday. Welcome to a new week. It's a big one when it comes to data, when it comes to earnings, and when it comes to geopolitics. But the market picture looks like this. Off the back of Sanae Takaichi's election victory, we have stocks powering to a fresh record on the Nikkei 225. So the Takaichi trade in full force, at least when it comes to equities. But you have the yen strengthening against the dollar. Japan's currency czar saying that he's got a high sense of urgency as he's watching these markets. The dollar weakness, though, powering gold higher. We are past that $5,000 an ounce level once again, up 1.5%. Now, we've got a lot of risk on the docket for the week ahead. We have a raft of European bank earnings with Barclays, Commerzbank and NatWest Group reporting. We'll also bring you the UniCredit numbers in just a moment. And then stateside, we've got a load of data to bring you as well, delayed as it is because of that US government shutdown. And so we're expecting payrolls, CPI and retail sales. But then on Friday, we have the Munich Security Conference. Who can forget US Vice President J.D. Vance's comments at that summit this time last year? Of course, NATO and the future of the war in Ukraine will be on the agenda. Now, let's get you those breaking earnings from UniCredit. The CEO, Andrea Orcel, saying that he's much more focused on the existing business. What you're seeing here is fourth quarter net income coming in at 2.17 billion euros, so beating the estimate of 1.77 billion euros. Net interest income for the fourth quarter coming in at 3.43 billion euros. Also beating the estimate of 3.135 billion euros. And UniCredit saying that it's going to return about 50 billion euros to investors over the next 5 years. A strong set of earnings, and we'll dive into those as well. But let's set you up for the day ahead. We begin with Japanese stocks rallying to fresh record highs after a resounding win by Prime Minister Sanae Takaichi. Let's go to Winnie Xu now in Hong Kong for the market reaction. Winnie, what are you watching?
Yeah, morning, Lizzie. Like you mentioned, it is that landslide victory by Prime Minister Takaichi that's lifting Japanese stocks today with that revival of the Takaichi trade as investors bet that her key spending areas like AI, tech, energy will be able to get a boost. And hence you're seeing Nikkei 225 here up more than 4%, the most since April. And that is taking both Asian stocks and also Japanese benchmarks to fresh record highs. Now, you would also wonder why the Japanese yen, which should have been weakening, is actually strengthening up 0.5% here. And as you mentioned, it is some of these warnings from the chief currency officials that they are closely watching the moves in FX with high sense of urgency, and also the finance minister saying that she will communicate with markets if needed. Now, also flip the board and take a look at what's going on in the JGB space, because we're also seeing some divergence moves earlier today, especially when it comes to, for example, on the longer yield, a longer term yield actually stabilizing a bit, because investors are now actually expecting that Takaichi now will not have to really aggressively push for those spendings because she has won that super majority. However, when you look at the shorter end of things, a bit more, rising a little bit more, that's also coming after how right now that she is able to push forward for those spending, inflation will likely going to continue to rise. And that will lead the Bank of Japan to be able to still continue with that rate hike path. And for now, markets, when it comes to the swaps, we are pricing in an 80% of a hike by April. Also flip the board and take a look at what are some of the sectoral moves when it comes to that victory. And yes, obviously with tech and also defense being those key sectors of her spending, we are seeing these related stocks up some 10% or so. But also when it comes to chip stocks, it's also supported by those comments by NVIDIA's Jensen Huang over the weekend saying that these capex spending are actually appropriate and sustainable. Also, we've got those local reports saying that Samsung will be mass producing some of these HBM4 chips from Lunar New Year. Back to you, Lizzie.
Really great stuff. Thank you. That's Winnie Sue in Hong Kong. Well, let's dive into the Japanese politics now. Sanae Takaichi winning the biggest election mandate of any Japanese leader since World War II. Now, back in October, she struggled to wrangle enough seats in Parliament to become Prime Minister. But now her Liberal Democratic Party controls 2/3 of seats, giving her freedom to increase defence spending and cut the sales tax on food. Let's get more with Bloomberg's Sherry Ahn. She's in Tokyo for us. Sherry, when it comes to domestic fiscal policy, what's Takaichi likely to do with this big win, and really, how fast?
Lizzie, you said it. This was a real historic victory for Prime Minister Takaichi. We're talking about not just the 2/3 majority achieved, but the supermajority that allows the Liberal Democratic Party to override any vetoes coming from the upper house. So in question right now, what happens to that promise of the sales tax cut on food that the Prime Minister put forward during the campaign season? That's an 8% tax that she said will be suspended for 2 years. You talked with Winnie about those JGB yields stabilizing on the long end. Perhaps a lot of it was already priced in, but the concerns about the long-term fiscal health of Japan had led to partly that JGB meltdown that we saw just a few weeks ago, with yields rising to record highs. Now, Finance Minister Katayama had to come out this morning to explain further that this is a sales tax cut only on food, only for 2 years, and it will not require additional bond issuance. But the key question by markets is, how will you fund it otherwise? Because we're talking about a cost that will be more than 5 trillion yen. That's more than $31 billion per year. Not to mention that she has already announced billions of dollars in a huge stimulus package.
And Sherry, how should we interpret the currency comments this morning?
We've heard really from the likes of Atsushi Mimura that Winnie alluded to, the chief currency official here in Japan, talking about how coordination with the U.S. continues and that they're watching the yen with a high sense of urgency. These are some of that rhetoric that you get from policymakers here in Japan, signaling potential intervention to come. But of course, we had also heard from Prime Minister Takaichi herself, as the votes were being counted, that she wanted to rectify and clarify her comments on the benefits of the Japanese yen, which really sent the yen plunging just last week. The incredible pressure that came when she talked about some of the benefits to the export industries. That what she meant to say was that the economy in Japan, she wants to make it strong enough that it can withstand any currency fluctuations. But given how anxious really the markets have been around the Japanese yen on this large expected fiscal spending, not to mention that Takaichi prefers a more loose monetary policy coming from the BOJ, her comments have really been in focus about what really do Japanese policymakers want when it comes to the strength of their currency.
Sherry, thank you so much for your reporting this morning. That's Bloomberg's Sherry Ahn out of Tokyo. I just want to bring you a scoop that's broken across the Bloomberg terminal just now, which is that Chinese regulators have advised financial institutions to rein in their holdings of US Treasuries. They're citing concerns over concentration risks and market volatility, and they're urging banks to limit purchases of US government bonds and instructing those with high exposure to pare down their positions. Now, the directive doesn't apply to China's state holdings of US Treasuries, but of course the worries are really echoing those made by governments and fund managers elsewhere in this brewing debate about the safe haven status of US government debt and the appeal of the dollar. You are seeing on your screen the moves in markets, Treasuries extending their losses on this report, yields higher across the curve. You've got the 10-year Treasury yield now up 4 basis points at 4.24%, and the dollar edging lower off the back of this report as well. So the Bloomberg Dollar Spot Index is down 0.2%. But still ahead on Daybreak Europe, as speculation swirls about the future of Prime Minister Keir Starmer, we'll be speaking to the Deputy Leader of Reform UK. That conversation with Richard Tice later on this hour. But first, what's next for Japan's markets following Sanae Takaichi's landslide election victory? We'll dive into that with our next guest. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:12 a.m. here in London. Now, the yen is strengthening after Sanae Takaichi's landslide victory in Japan, moving away from the intervention, so some might say. Well, let's dive straight into the market reaction with Carol Kong, economist and currency strategist at Commonwealth Bank of Australia. Carol, thanks for joining us. Your note this morning says the Takaichi trade is here to stay. Should we just look past the yen strengthening this morning?
Look, dollar yen did initially rise off the back of, media reports of a big LDP win. That reaction wasn't surprising because markets were pricing in more expansionary fiscal policy and probably slower BOJ rate hikes. Dollar yen did, reverse some of its gains in the following hours, but I think those, was probably driven by concerns about FX intervention. We've got some renewed warnings from MLF officials with the chief currency chief saying that, the MLF is again watching the currency market with a high sense of urgency. So that probably, caused speculators to move back, on the sidelines for a while. But I don't think the reversal in dollar yen would last just because fiscal policy will loosen under an emboldened Takaichi administration.
Well, yeah, how do you interpret those comments from Matsushi Momura? Does it signal to you that maybe an intervention isn't far away?
Look, the MLF and officials from different Japanese authorities have been warning about the currency for quite a while. They have been pretty clear that they are uncomfortable with the current level of the, Japanese yen. I think, under a Takaichi administration, the risk of direct intervention has definitely risen. And judging by warnings by, MLF officials, we are definitely getting closer to an actual intervention. People think that there is a so-called line in the sand for the MLF, with some people saying that the 100 zone could be the trigger for MLF officials. But I don't really think the MLF is really targeting a specific level. They care more about the speed and disorder of the moves rather than a specific level. So I think, if the yen does weaken sharply from here, the risk of a direct intervention will definitely rise.
Well, if Takaichi goes back to welcoming yen weakness, could we see it testing 160 per dollar, for example?
Yeah, look, her comments earlier about, a weak yen favoring exporters really sparked some speculation that Takaichi may welcome further yen weakness from here. But I would note that she did pare back her comments and said that she didn't really specifically highlight the positives about a weak yen. So I think ultimately, Takaichi will have to accept a weaker yen because, if she does want to pursue looser fiscal policy and probably, put some pressure on the BOJ to slow rate hikes, she will ultimately have to accept a weaker yen, and it will just increase pressure for the MLF to slow the rise in dollar yen.
Do you buy this idea that because it was a decisive win, Takaichi might not push her fiscal policy through as aggressively, that she might not want to upset markets and indeed won't need to upset markets as much?
I do think that, Takaichi will continue to press ahead with her reflationary policies because she would interpret a landslide win by the LDP as strong public endorsements of her policies. So I think she would definitely go ahead and, deliver on those promises of looser fiscal policy. But ultimately, the markets, especially, the FX and bond markets, will be the biggest constraint on her fiscal expansion plans. If the yen does weaken further and JGB yields rise further, then ultimately, Takaichi will have to pare back those stimulus plans in order to appease market participants.
So where does it leave the Bank of Japan? When do you see the next hike?
Our base case continues to be one more 25 basis point rate hike by the Bank of Japan in June. Now, that's fully priced by markets. And I note that markets have been, recently shifting their pricing towards an earlier rate hike in April, probably because of the weakening in the Japanese yen And I do note the risks are definitely skewed to an earlier rate hike because BOJ is getting more concerned about the weakness of yen passing through to imported inflation. But, we have to wait and see what the BOJ thinks the terminal rate is, or I should say the neutral rate. The BOJ has recently been playing down their estimated neutral rate range of 1 to 2.5%. And I think that suggests that, the BOJ may be trying to, shift their view of neutral upwards. So that means that the current rate of 0.75% may be still a little bit too accommodative for the economy. So the risk is definitely a larger rate hiking cycle than what we currently expect. But our base case is one more 25 basis point hike in June for now.
And maybe if you see the Ministry of Finance leaning towards issuing more shorter data bonds, you could see more flattening than steepening of the curve, maybe. Carol, great to get your insights this morning. Carol Kong, economist and currency strategist over at Commonwealth Bank of Australia. Well, coming up on this programme, oil slides on an easing of tensions in the Middle East as the US and Iran hold talks. We'll bring you the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Oil prices falling as tensions in the Middle East ease after Iran and the US engaged in indirect talks on Friday in Oman. Iran said it agreed with the US to continue these discussions to de-escalate tensions and avert a military confrontation. Let's get the latest now with our Middle East Managing Director, Onur Ant. Morning, Onur. Just walk us through what the two sides had to say about the outcome of these talks.
Well, the brief discussion on Friday in Oman ended up basically allowing both sides to say that the discussions provided a basis for a continuation of talks. Both the Iranian foreign minister and president said as much, while on the US side, we saw that the President Donald Trump saying that not only he was under the impression that Iran wants a deal, in his own words, very badly, he also said that a limited deal on the nuclear issue alone could be acceptable for the US, and both of those commentary from both capitals in this conflict were taken as a sign that there is the immediate threat of a military confrontation. Another war in the Middle East between the two countries is now less of a risk than it was until a few days ago.
And, Onur, we know that the Israeli Prime Minister Benjamin Netanyahu is going to be visiting Washington on Wednesday to meet with President Trump. How much pressure is he putting on the White House to broaden the scope of these talks beyond Tehran's nuclear programme?
Well, this is a serious crack that appears to be emerging between the two sides. As I said, US President Donald Trump said that a limited deal, a somewhat more limited deal, concentrated on the nuclear issue alone could be acceptable for the US. But Israeli officials have made it clear from the get-go that that is not what they're seeking. Even after the Oval Office meeting between the US and Israeli leaders were announced over the weekend, we have seen that the Israeli Prime Minister's office made a statement saying that they were seeking to push the US to seek a broader deal that would first limit Iran's long-range missile capabilities and also force the Islamic Republic to end its support for the so-called Iran Axis. That is a group of militia across the Middle East that are supported by Tehran and are openly hostile to Israel. So yes, Israeli Prime Minister Netanyahu will be pushing for this when he meets Donald Trump on Wednesday in Washington, D.C., Lizzie.
So, Onur, as we start a new week, where does it all leave oil?
Well, we have seen that the oil has been coming down a little bit on signs that the risk of an imminent war between the two sides has somewhat subdued. But needless to say, oil is still up more than 10% when you compare it to where the prices were at the beginning of the year. So investors are still pricing in the possibility that these talks might go nowhere and a military confrontation between Iran and the US might be inevitable in the near future.
Honor, thanks for the reporting. That's Honor Ant, our Middle East Managing Director. Well, now to some other top stories we're following for you this morning. A Hong Kong court has sentenced pro-democracy former media mogul Jimmy Lai to 20 years in prison. It's the harshest sentence to be given under the Beijing-imposed national security law. The judges ruled that Lai was the, quote, mastermind of the conspiracies and therefore warranted a heavier sentence, with the punishment being effectively a life sentence. Elsewhere, Thailand's ruling Conservative Party has clinched a solid election win, marking the first victory this century for a party aligned with the country's royalist establishment. Preliminary results show the Phum Jai Thai party is set to secure 191 seats out of a possible 500 in the House of Representatives. Meanwhile, the pro-democracy People's Party is on track for 115 seats. And socialist Antonio José Seguro has won Portugal's presidency, defeating far-right challenger André Ventura in a runoff vote. Projections from public broadcaster RTP show Seguro taking up to 73% of the vote. The results expected to ease tensions with the centre-right government and reduce the risk of institutional confrontation. Meanwhile, here in the UK, the jobs sector is starting to stabilise as businesses emerge from a period marked by speculation over higher taxes. That's according to a survey conducted by the Recruitment and Employment Confederation, which is closely watched, of course, by Bank of England rate setters. Employers continued to scale back hiring for permanent roles in January, but the pace of decline was the slowest in 18 months. Well, those are some of our top stories from around the world. Let's check in on these markets as we start the week. Here's a picture when it comes to stocks. And when we're looking at the MSCI Asia Pacific Index, under the hood of this, we have Japanese equities at a record high. This, of course, off the back of Sanae Takaichi's election victory. So the Nikkei 225 powering the broader index higher. The Takaichi trade in full force, at least when it comes to equities. And on both sides of the Atlantic, we've got futures pointing higher. Of course, we had lots of concerns about tech valuations at the end of last week. The Dow pushing above 50k on Friday, and so a volatile one because of those tech concerns, but in the green this morning. Now, flip the board over to the cross-asset picture, and we continue to watch the Japanese story. When it comes to the currency reaction, we actually have the yen strengthening against the dollar this morning. So 156 per dollar is where we trade. As we've been hearing from our reporters, perhaps this is because the victory was priced in, but also because we've been hearing commentary from the currency czar saying that he's watching these markets with a high sense of urgency. We also have the 10-year Treasury yield at 4.23, minding the long end of the Japanese curve as well, but of course with a raft of US economic data to come later on this week. Just finally, keeping an eye on the pound, it took a blow from the political speculation around Keir Starmer's future and that dovish vote split at the Bank of England last week. We also now factor in the resignation of Starmer's closest aide, Morgan Sweeney, a story that we'll be diving into later on this hour. But coming up, we'll monitor the Japan story with the yen in focus as Prime Minister Takaichi's big election win sets the stage for further fiscal stimulus. So more on that next, and UK politics. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Victory rally. Japanese stocks surge and the yen edges higher after Prime Minister Sanae Takaichi wins a supermajority and a powerful mandate for her spending plans. Here in the UK, Starmer's under strain as the Prime Minister's closest aide quits amid controversy over former US Ambassador Peter Mandelson. We'll get the view from the Reform UK Deputy Leader Richard Tice. Plus, easing tensions. Oil declines after Iran describes its nuclear talks with the US as a step forward. Well, a very good morning. It's 6:30 a.m. here in London. Welcome to the programme if you are just joining us. And your markets picture looks like this. We have stocks in Japan at a record high off the back of Sanae Takaichi's election victory. The Takaichi trade in full force, at least when it comes to the equities picture. But the yen actually strengthening against the dollar this morning. Could it be because the victory was priced in? Could it also be because of those comments from the currency czar saying that he's monitoring these markets with a sense of urgency? urgency. So 156 per dollar is where we trade. The dollar weakness actually helping to power the yellow metal. Gold higher this morning. We're above $5,000 an ounce again after a historically choppy week last week. So keep an eye on that. On the front pages this morning, we are looking at the Financial Times leading on UK Prime Minister Keir Starmer facing a crunch week to try and hold on to power. So this is after his Chief of Staff, Morgan McSweeney, quit, taking responsibility for that decision to appoint Lord Peter Mandelson as ambassador to Washington. But in fact, our UK political editor Alex Wickham's reporting that number 10 officials are bracing for cabinet ministers to privately tell the Premier to stand aside or threaten their resignations if he doesn't. So we'll keep an eye on that. The Telegraph running with that angle in particular. It's reporting that leaders of 3 trade unions have also called for the Prime Minister to quit as well. And this is the story that's on the front page of The Guardian too. They've got Starmer's allies hoping that McSweeney's departure is going to draw a line under the Mandelson fiasco. So a bit more of an optimistic note there. But you can get a roundup of all of these stories and all the global stories you need to know to get your day going by looking at today's edition of Daybreak, which of course terminal subscribers can find by going to DAYB Go. Well, let's dive back into the Japanese story. Our top story this morning, Japanese stocks rallying to a fresh record high after a resounding win by Prime Minister Sanae Takaichi's ruling party. The yen has edged away from the danger zone now for intervention, while declines in government bonds have been limited. Let's bring in Bloomberg cross-asset strategist Mark Cranfield for analysis now. Mark, what stands out to you from today's Japan asset moves? Good morning.
Good morning. Probably the yen, I think. A lot of people will be slightly surprised that the yen is a bit stronger today and not weaker, as that was considered to be one of the main things that Takaichi was in favour of. Judging by the way she was speaking ahead of the election, she seemed to like the idea of the yen staying weak to help exporters in Japan. But obviously, as you were saying earlier, a lot of that is priced in. And what we've also heard at the end of last week were some relatively hawkish comments from somebody on the Bank of Japan who was thought to be a dove. Now, the odds for the Bank of Japan to raise interest rates again in April is now running pretty high, well over 70%. And it looks as though we could run into a situation here now that the election's out of the way. The Bank of Japan don't need to be so circumspect in how they talk about raising interest rates as they were before the election. They can probably be a little bit more upfront about it. And at the same time, the Japanese leadership may be a little bit more relaxed. Now they've won the vote, they can possibly look at the real underlying problem in Japan, which we're reminded of today with the labour cash earnings, that Japanese people on a relative basis are losing out. Over the past year, inflation has risen too quickly in relation to the value of their wage increases. So clearly it is in the interest of the Japanese leadership to do something about fighting inflation. That's the job of the Bank of Japan. They may encourage them to start to push ahead of a slightly earlier rate hike. Traders can see that. That feeds into a slightly stronger currency. And of course, the yen was starting to move. And then we've had this story that China is advising its banks to be more circumspect about holdings of US Treasuries. That's also helping to push the US dollar a bit lower. Maybe we'll talk about that as well.
Yeah, because we're looking at Treasury yields higher across the curve as well. Dollar weakness, as you mentioned. How can we separate this scoop out from the Japanese election impact?
I mean, the timing, a lot of macro traders will be saying, why today? Why are the Chinese authorities showing concern about holdings of treasuries in China? They've had big holdings for a very long time. Why suddenly now? Well, it may well be that they're also taking into account the fact that Japan is a very big holder, even bigger than China these days. And there's even been some talk that the Europeans are getting a little bit edgy about holding so many treasuries as well. Traders can see all this building up. Now, it would be irresponsible if the Chinese authorities don't go to their banks at home in China and say, look, there's a chance there's going to be a lot more volatility in the dollar and in the treasury market. How are you guys positioned? How is your hedging strategy in place in case we do get a situation where more money moves back to Japan because yields there are more attractive, also the stock market is getting more interesting, or the Europeans themselves start to move money back as well? China wouldn't want to be left out. That's two very big holders of US bonds. If China is left too late, their banks will suffer. So it could well be that the Chinese authorities are warning their banks at home, if you have got Treasury holdings at the moment, or US bonds in general, prepare for a lot more volatility, possible curve steepening, and you might not be the only ones. Don't be the last one out of the gate, because once the dollar and bonds start to move, it could be pretty big in these situations where Treasuries haven't moved a great deal over the past few weeks. Volatility could increase very quickly. Nobody wants to be the last person through the exit door.
All right, well, we're looking at 10s and 30s up 3 basis points as things stand. The dollar weaker 0.2%. Bloomberg's Mark Cranfield, we thank you for that analysis. Well, coming up on Bloomberg Daybreak Europe, as Prime Minister Keir Starmer's future hangs in the balance, we'll be talking to the Deputy Leader of political party Reform UK, which currently leads opinion polls. That conversation coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, the UK Prime Minister Keir Starmer's future hangs in the balance after his Chief of Staff quit following a backlash over Peter Mandelson's appointment as UK Ambassador to Washington. For more, I'm joined by Bloomberg opinion columnist Rosa Prince. Rosa, can Starmer last the week, is I'm sure the question markets are asking. How is he going to try and shore up his position this week?
That is the big question. So he hoped that by sacrificing his advisor, Morgan McSweeney, he can buy himself a little time. That was something that some of his critics were asking for. But it's a huge sacrifice. Morgan McSweeney was so central to his project. And there are definitely rumours in Westminster that he is in his final days. It's difficult to see how, even if he does manage to stumble on, how he will achieve much. I think he's not ready to go, but it could be a matter of days, if not weeks.
And how worried should the markets be when it comes to fiscal credibility about the runners and riders to replace the Prime Minister, Rosa?
Yeah, we have seen some jitters in the market in the past at the prospect of someone else taking over a number 10 who would be to the left of the Prime Minister. Now, the fact is that actually we don't really know what measures somebody who replaced him would want to introduce, simply because even though his premiership has been in trouble for, well, 9 months or so, there isn't an overt leadership contest yet, so we haven't had people setting out their kind of policy programmes. There are definitely some runners and riders, such as Angela Rayner, who we can see on the screen, who is to the left of the Prime Minister, and I think that does concern the markets. However, in the short term, what I think will give the markets as much concern is just this sense of crisis, the instability. This is the last thing that any of us want, really, is so much political turmoil at the moment. So I think that's the big hit at the moment that will be coming down the track.
I'm still recovering from 2022. Rosa, thank you. That's our Bloomberg opinion columnist, Rosa Prince. Well, the leader of the Reform UK party says that Prime Minister Keir Starmer won't be far behind his key aide, Morgan McSweeney, who, as we say, quit yesterday. If Starmer survives the clamour for accountability, the Prime Minister faces a special election in Manchester this month and a raft of local elections in May, where polls suggest that Labour will hemorrhage seats to opposition parties. I'm joined now by the deputy leader of one of them, and that is Reform UK. Richard Tice. Richard, great to have you with us in the studio. Thanks for coming in. You must be rubbing your hands at this chaos engulfing Labour.
Well, it is chaos, that is for sure. And Morgan McSweeney's resignation, it's just the beginning, because over the next few weeks, what is going to be released via the Intelligence and Security Committee is the depth of messages and emails that have gone on in and around number 10 in the run-up to the appointment of Peter Mandelson, and subsequently, and also his involvement at the heart of this Labour government in the run-up to the election and afterwards. And I think as those come out, if the Prime Minister is still Prime Minister at that time, that will effectively finish him off. But as your columnist was just saying there, I mean, it could be a matter of days. Such is the turmoil and fury in amongst his own backbenchers, who didn't have much love for him anyway.
So the question for you is whether you're ready for government. And, of course, the rumour is around your party that you would be Chancellor, or at least Business Secretary. And if the polls are right, it's Reform who would be winning the next general election. The question for markets is, how can you ensure they can trust you?
The reason markets can trust us is because we are business people. We've got a successful track record of making money for shareholders, for investors, for lenders, And, you know, that's who I am. I ran a FTSE 250 reserve business for 4 years, tripled the share price. So I think people can say, yeah, actually, these are business-like people who understand profit and loss, balance sheets, how to make money, how to protect cash flows, and who can create proper growth. And that's what we need in this country. We're going to need growth because we've got flatlining GDP. We're borrowing £150 billion a year, which is completely unsustainable. And all of the potential candidates post-Keir Starmer in this Labour government, they're all high spending, high borrowing, and frankly, I think the markets would take fright at that.
And Nigel Farage has argued that you'd balance your tax cut plans with spending cut plans, right? But
the first thing we have to do is we've got to cut the vast amount of wasteful spending, which we're already doing, cutting our teeth, running successfully the 12 councils that we run. Alongside that, you need to deregulate the daft regulations. We want smart and safe regulations, but daft regulations that hinder growth is a problem. Only then can you afford performance-related tax cuts.
Well, last time you were in this building in November, you talked about those working groups when it comes to deregulating the city. What's the progress there?
So they're all up and running. We've got working groups looking at financial services and governance and regulation, SME growth capital, because there's a shortage of growth capital in the UK, simplifying our pensions and savings that's far too expensive and complex, and also our over-complex tax code. Those 4 working groups, they're underway. They'll be reporting to us as the leadership team later this year. And then I've also got one on energy as well, because our electricity is far too expensive because of net zero that we would scrap immediately. Catastrophic policy imposed on the UK, and more besides.
What we haven't heard much about, though, is trade, and we've seen how unpredictable President Trump is. Do you still want to have a close relationship with the US when it comes to trade?
Of course, the US is our most important ally. It's our single biggest trading partner, both ways, in terms of exports, imports, foreign direct investment, and we're so aligned with them on critical matters around defence and national security. So, of course, we want that strong relationship, but that's the thing about good friendship, is you tell your friend when they're doing well, they've got something right, but also if they've got something wrong.
What about if they want more when it comes to food standards? Because, of course, you don't want to undermine British farmers.
Of course, we all want, as I say, smart, safe regulations, and there's always a negotiation around the edges. The thing about trade deals is you don't have to do an all-encompassing trade deal. You can do partial trade deals where you can agree things. But sometimes things can be a bit too difficult for the respective countries' national interests. So you put that in the sort of the pending tray. Look at that later down the track when you build sort of a successful track record of making trade deals work for both sides.
I also want to ask you about donations. I was in South Africa recently and a billionaire told me Nigel Farage is for sale. What do you say to those who are concerned?
He's completely and utterly wrong. Nigel Farage is not for sale. None of us are for sale. We stood up against Elon Musk about a year ago, actually, and said thanks but no thanks. So your gentleman there, utterly wrong.
But why are you taking so many donations from donors who are not living in the UK?
Look, all political parties take donations as long as they are lawful, in accordance with electoral commissions, because otherwise you can't exist, you can't function, you can't have good infrastructure, good research teams. And the markets want to have the confidence that we know what we're doing, we know what we're talking about. And the simple answer is we do. And we've been talking about concerns over rising bond yields in the UK, spending more than we're earning. I've been talking about that for many, many months now.
But Nigel Farage's trip to Davos was paid for by the Iranian billionaire Sasan Gandhari. What do you think his interest is in reform?
What actually many people's interest is in the great United Kingdom being successful again. We're sort of at the moment, frankly, down and out and on the ropes because of weak, feeble, cowardly mismanagement, firstly by the Tories, now by Labour. It's absolute chaos. There's no growth. And the role of government is to create growth. I'm old enough to remember when the UK was growing at 2.5% to 3.5% year in, year out in the 80s and 90s. Anybody under 40 doesn't know what that feels like, what it looks like.
You really think that's why he's giving you money?
I think what entrepreneurs want, who believe in Britain, they want a successful party running the government who will get the country growing again for the benefit of all. And that's what I hear from people. And your alternative is, if you don't want any donations, then you have to go to state funding. And, that's a national debate if you want, but I don't think that would be very popular. And, let's just remember, for example, the Labour Party's biggest donation in 2024 was a South African multimillionaire.
We've also taken £9 million, a historic amount, from a crypto investor who, by the way, lives in Thailand. What about people who are worried?
Crypto's part of the future. I mean, lots of your viewers and listeners are involved in crypto markets. Doesn't it show sort of common sense that actually we understand what's going on out there? What are the growth markets? What are the opportunities?
But what about those who are worried that you're taking that money and it's going to shape your crypto and financial services policy?
Don't worry. Relax. We know what we're doing. It's about growing the economy, and we're not for sale to anybody.
OK. Look, we've got the local elections coming up in May. What's success going to look like in London for reform?
In London, well, there's about 1,800 seats up for grabs across the whole of London. We will win some councils from a standing start in London, and that's going to be a remarkable thing. And also elsewhere in the UK, where we're allowed to have elections, where Keir Starmer hasn't cancelled them because he was terrified that he was going to lose to reform. I mean, this is what's going on. That's what you do in sort of dictatorships in different parts of the world, as opposed to one of the greatest democracies in the world. And truly shocking. But we're fighting hard for every seat, and I think we're going to surprise people on the upside.
You're also fighting hard to claim ex-Tories to join reform. You've got more Boris Johnson cabinet members than Kemi Badenoch's shadow cabinet. How do you defend that when you criticise former Conservative governments?
Because lots of good people in the media being saying, hang on, you haven't got much experience to run the country, so now we've brought in a bit of experience, and yet we're still being criticised. We almost can't win. Look, the reality is that we need some ministerial experience. We've now got that. I'm not saying I've run a department, but what I have got is a successful business track record, like Nigel Farage and others. And you combine those two things and you have a winning formula. And the key thing is you have to get this country, our economy, growing again. We have to make people up and down the country feel better off, feel there's a reason to go to work, there's a reason to be an entrepreneur, a small business owner, to be successful, to invest in crypto, to invest in the latest technology using AI, improve our productivity, all of these amazing things. We've got to get going again, as opposed to being stagnant.
OK. Richard, thank you for coming in, explaining your position. Good to see you. That's Richard Tice, Reform UK Deputy Leader. Well, switching focus now, the Winter Olympics got underway in Italy over the weekend, with the opening ceremony split between Milan's San Siro Stadium and the Dolomites. Italy faced widespread rail disruption on the first day of the Games, with the country's transport minister saying it was an attack on the nation. On the slopes, Lindsey Vonn's defiant bid to win the Winter Olympic downhill at the age of 41 came to a crashing halt. The American skier broke her leg just days after she badly injured her left knee. Norway tops the medal table with 3 golds. Staying with sports, the Seattle Seahawks are the Super Bowl champions. They dominated the New England Patriots 29-13 to win Super Bowl 60. Puerto Rican superstar Bad Bunny making history, becoming the first male solo Latin artist to headline the halftime show and performing the entire set in Spanish. His performance, though, drew criticism from US President Trump. Well, we've got plenty more coming up, so don't go anywhere. This is Bloomberg.
Japan, the prime minister called a snap election, the quickest snap election in Japanese history. And boy, has she had a big victory today. She's going to have 2/3 majority in the upper house. President Trump endorsed her last week. She is a great ally, great relationship with the president. And when Japan is strong, the U.S. is strong in Asia.
US Treasury Secretary Scott Bessent there heralding the victory of Sanae Takaichi in Japan and her party. You can see here the reaction in markets, the yen strengthening against the dollar and the volatility, though, very much remaining. How much of this victory was already priced in, you might ask? We also have to factor in, of course, the comments from the currency czar saying that he's watching these markets with a high sense of urgency. But flip the board over and a purer sense of the Takaichi trade comes out when we look to stocks. So the sectors specifically transport, banks and machinery higher off the back of this victory. And flip over one more time to the bond space. We've seen a sense of calm, actually, when it comes to JGBs. First of all, you had the government calling for that, but also a series of strong auctions. And perhaps there is a sense, as we were hearing from our guest earlier, that because of this decisive win, Takaichi can get on with her fiscal plans, but at a more calmer pace now that she has that victory behind her. But to access all of these charts and all the charts we use here on Bloomberg TV, do check out CHRT TV Go on your terminal. And a reminder as well of your risk events for the week. So we've already got the election in Japan behind us. Now we look at bank earnings here in Europe. We also have lots of luxury earnings to watch as well. A raft of US data coming out because of the delays, because of the US government shutdown. So we've got payrolls, CPI and retail sales all on the docket. And then on Friday, geopolitics in focus. The Munich Security Conference comes around again. Who could forget those comments from the US Vice President J.D. Vance at that summit this time last year? The future of NATO and the war in Ukraine very much in focus. But coming up, we'll talk all things competition and big tech with an exclusive conversation with the European Commissioner for Competition, Teresa Ribera. That's at 9:15 a.m. London time. And the opening trades coming up next. This is Bloomberg.